Have you ever felt like you were in the wrong financial boat, somewhat drifted out to sea, not knowing when you'd see the lighthouse? When might your ship come in? What does that look like for you? What does that look like for me? One of the things I've wrestled with over the last, I would say 6 to 12 months is, am I actually investing in the right platform? Is my money where it should be? Am I getting everything that I can? And I think it's prudent to continually evaluate the different options in the market, whether that's changing your insurance provider every year, looking at different providers, looking at a car company you've maybe only thought about, or maybe it's moving to a certain part of town that you thought maybe not the best, but it turns out maybe it is. It's the analysis and thought I've had for quite a while. And now that I've started to look into it more, I actually moved money from Betterment over to Wealthfront. That's the title of the video today. Now, what's the financial situation I have now? What are some of the struggles or inefficiencies I faced? So my situation now is, you saw in the last video, I unloaded a lot of funds away from Fundrise in the wake of some of the real estate issues that the country's facing. Again, nothing against Fundrise. It's not that I think it's a bad platform. And if you are interested, make sure you check out the link down below. I'll put the Fundrise video in there. You can check it out. But moving on to Betterment versus Wealthfront, it kind of was the same thing. There's more options in Wealthfront. Fees are roughly the same, more customization, I think a better overall user experience, and more automation. I first learned about Wealthfront several years ago, back in 2020, actually put some money into it as a small investment, but ended up pulling it out and putting it back into Betterment. I would say the biggest things that intrigued me before I really dive into more of the data is Wealthfront just seemed like it was doing more than what Betterment was, and not just from a financial standpoint, but from an overall user education standpoint. So some of the key differences I think between the platform are individual customization, more options when you actually invest, and then it has options that Betterment does not. If I look on my screen, I've already moved some money over, but one of the first things I'll call out is when you're looking at their platform, they have the ability to not only pick here, in this case, a automated fund like you'd see at Betterment, but you actually have the ability to go in and edit a portfolio and change or adjust the individual ETFs that you're looking at. Right now, I've invested in VTI, VEA, VWO, VIG, and VTEB. In this portfolio, in my automated section here, I've got a risk level 10 of 10, which means my equities are high and my bonds are much lower. However, I can change that at any time. That was number one. Number two, when I go back, is I actually can invest inside of Wealthfront for the same expense ratio. I'm able to invest in automated bond portfolios. That is not something Betterment has, at least today. That's number two. And what I mean by that is I'm able to get a higher yield on my money with the automated bond portfolio than I would in just the cash account at 4.8%. But I'm also able to take advantage of the extreme liquidity inside of the bond fund, again, that I'm not getting with Betterment. So that's number two. Number three is a real big one, and that's direct indexing. So direct indexing is the ability in Wealthfront, once you hit $100,000 in the portfolio, they're able to start selling individual assets out of your portfolio, either at profits, or if it's losses, they can tax loss harvest it. Betterment never offered that, which I thought was a big letdown. So I've talked about the three things that got me over there, but what does it actually look like once I'm in the platform? So, well, this is the home screen. I've already set up a couple different accounts. One is the autopilot indexer, which I just showed you a minute ago, and that's nothing more than these are five different tranches of equities, and then I've got a cash position here, but I've got stocks, US stocks, foreign, developed, emerging, dividend, municipal, and this was, again, much the same as Betterment. Walks you through, looks at your risk parity, time horizon, and what you'll do in a market crash versus a market surplus. Also, I did move some funds over from Betterment, and some of that was automatically converted. Actually, since I brought that up, let's talk about that. What does it look like to actually convert funds over from Betterment to Wealthfront? It was actually very simple. I got into Wealthfront, I created an app password, which you'll see inside of Betterment. I connected the two. It asked me a series of questions in terms of what do you want to do with your money when it comes over? Do you want us to sell it? And that'll institute a taxable event, which may or may not be appropriate for you in your fund. I actually chose to sell those off as the time accrued, And you'll see down here, the last position in my portfolio from Betterment was KOMP. It sold 208 of 216 shares. And it's actually gonna hold these shares. And if I click here, I'm actually gonna pull up the page, transferring securities from another firm. Really what it'll do is it'll incorporate ETFs and stock that match your target allocation. It'll automatically invest cash. And if you're transferred to a stock investing account, it'll hold those stocks in terms of the same one. So if you had Tesla over here, it's gonna hold Tesla over here. I don't own individual stocks because you can't do that with Betterment, which is something I'll touch on in just a minute. What did it look like though? It was very simple, very seamless, very easy. I didn't have to pick up the phone. Not one email, not one message was sent. It was all automated. It took me about 2 weeks from start to finish. All right, so we went through this fund. What does the bond fund look like? Again, same thing. Open up an account. It asks you a couple questions. What's your risk tolerance? What's your risk parity? What does that look like? What's your age? What's your tax bracket? Or what's your adjusted gross income? Do you live in a state that has taxes or not? Has state income tax or not? If you live in a state with, it might make more sense to have some of these long-term treasuries or short-term treasuries, depending on your tax situation. And if you live in a state that doesn't have state income tax, this is less applicable. So just keep your eye on that. I did talk a minute ago about being able to invest in individual funds. That was something that really was lacking in Betterment. Yes, the direct indexing with Wealthfront's great. I do like that. I'm definitely taking advantage of that. The automated bond fund, that was number 2. Again, that's something else Betterment doesn't have. But number 3, the ability to invest in individual stocks. So if I go over here and open up, which I don't have today, if I open up individual stocks here, I can go into just straight stock investing. So I can set up the tax filing status. I'm not going to go through that right now, but I'm going to actually go back into Explore, and you can immediately start investing into stocks here along with your automated index investing, along with your bond fund. Oh, and by the way, Wealthfront offers a little bit higher APR than what Betterment does at 4.8%. So if you just want to park your money in cash, they've got you covered there too. If you want to invest in individual stocks, like I said, you can do that. And that was a big deal for me. So if I had to stack rank why I moved, it would be direct indexing, it would be automated bond fund, and then finally it would be the ability to invest into individual stocks or even buckets. Now, everyone knows on this channel, I'm a big Tesla fan. I can buy shares of Tesla right here. So I've got the current price, I've got some pertinent information around it, price earnings ratio, market cap, and daily volume. But it also has collections that contain Tesla, that contain the stock Tesla, which I like. It's giving me recommendations on what it thinks I'll want to invest in as I continue to go down this journey. So if I like Tesla, I may like electric vehicles, and maybe I want to buy this basket, as they call it, of stocks that contain portfolios or positions like Tesla. It could be Lucid, Plug Power. I can look into these and actually go in and say, hey, I've never even heard of Plug Power. What do they do? Well, they provide alternate energy investment technology, design development, and they're headquartered in New York. I can see the high and the low, the high in 1975 and the low. So it's trading at a very low book value right now. If I go back, maybe it's a luxury brand. So maybe I don't necessarily want to invest in electric vehicles. Maybe I want to invest in luxury brands. So Lucid, Royal Caribbean, Marriott, Hilton, Vail, those are other types of luxury brands that it's interested in. Or maybe I just am interested in founder-led companies. So think Apple, Amazon, in this case, Dell, Rivian, Nvidia, Palantir, CrowdStrike. This is a wonderful portfolio here. I can share this out. So you see a lot more customization, a lot more ability to tackle the entire picture of your portfolio. Even if you don't want to do it all right now, it gives you the ability to do that in the future. All right, so last, what have we not talked about? We haven't talked about expenses. So same as Betterment, they charge 0.25 on all assets under management, except things like your cash position. There's no management fee for that. There's no management fee for buying individual stocks or buckets. So if I go in here and I open an account and I buy up these 6 stocks, there's no management fee. There is a management fee, again, like I said, for your automated indexing, anything over 100,000, or if you're just doing a normal position here. So in this case, these are just 5 or 6, and 2 in this actually, in US stocks, VTI and IoT. So you'll pay the expense ratio of the ETF. So if maybe it's 0.03 or 0.06, plus your 0.25 to Wealthfront, which is what you were paying Betterment anyways. but you're still getting all the things that Betterment gives you. So you're getting tax loss harvesting. They're able to sell into individual or partial positions. That was something else that I thought I had heard of, and I wanted to double check before I moved money over. You are able to buy fractional shares with Wealthfront. I've seen some misinformation, whether it's in something like ChatGPT or Bard, that telling you that they do not do fractional shares. That is incorrect. I have fractional shares throughout many different portfolios inside of Wealthfront. So I was never going to sign up for something where I had to have full shares. That would be parking too much money in cash on the sidelines and not appreciating value on capital. Now, of course, it will bring in other accounts that you have, whether it's potentially a 401k, a stock plan. You can connect real estate to this. And the other thing I thought was that I saw that was I didn't even know about. Maybe it was in the literature. I never looked at it. Maybe it was on their website. I didn't notice it until I started moving money in. You can actually apply for a line of credit, and based on how much money you have in Wealthfront, your credit rating, and the amount of time, you can borrow money straight from your portfolio at a lower interest rate than what you may get if you go to a third party. So maybe a third party will charge you 9% and you can get 8% of your money. You can borrow at 8% from your own portfolio. Now, M1 does something like this. I'll link the M1 video right up here, right above my head. Make sure you check that out if you're interested in M1. I think what I really like about M1 is the ability to do individual stocks and rebalancing and buckets there, but there was no pre-built automated investing like you get with a Betterment. I really think from what my use case is, I had M1, I had Betterment, I've sold out of Fundrise, I've sold out of Betterment, and I've sold out of M1. I'm trying to consolidate as much as I can. I hate clutter, I hate hassle. I love going to one place for everything, and that's what I'm hoping Wealthfront can be. So on the final note, let's go through the wrap up. Again, why did I move over? It was automated investing of direct indexing over 100,000. It's the automated bond fund, which gives me higher yield than what I'm getting in a cash account. It's the ability to do individual stocks or buckets, or baskets as they call them. And then it's the ability to do portfolio lines of credit if I want to borrow at a lower interest rate than I may be able to get vis-a-vis a third party. Now, there's some other links I'll show here. The Wealthfront blog I thought is extremely interesting. They've got a lot of good info out here. Even if you're not a Wealthfront customer, they really got a handle on it. I really like what they're doing. The last thing I'll say is I did run this through. I'm a big artificial intelligence on this channel. This is what we're moving towards. I did do a deep dive into this and what it looks like. I did get some pretty good information here, whether it's minimum deposit, tax efficiency, and I've went through a lot of this. These are, again, non-physical or non-human advisors. These are all robo-advisors. And I'll put a link down this in the description as well for the query that I ran, the prompt that I ran in here. So what do you think? Is this something you would be interested in investing in? Are you invested in Wealthfront? If you are, what have your returns been like? Are you using all the features inside of Wealthfront today? If you are, please let me know. And let me know what you don't like. If I covered in something in here that you don't like, or I need to do a follow-up video, please let me know. If you enjoyed this content, make sure you squeeze the like button, give me a thumbs up, comment down below, and as always, don't forget to design your financial freedom. Take care. Bye-bye.